And good afternoon, ladies and gentlemen. Welcome to T3 Live's web series. My name is Sammy Saeed. I'm one of the T3 Live representatives here. Folks, you may have heard of me or heard or seen an email or a phone call from me. Pleased to have you join us this evening. This evening, we will have our web series starring Kurt Capra discussing anything and everything in the Forex market. So without further ado, ladies and gentlemen, Kurt Capra.
Good afternoon, everybody. Good evening, wherever you may be logging in from. Can everybody hear me? Just want to do a quick sound check, make sure that I'm coming through clearly. All right, awesome. Excellent. So, I know I'm coming through well. Hopefully you can also see this screen. Uh, and the only other question I have really to get going is where are you guys logging in from? Usually I say, good afternoon, good evening, because we have people logging in all over the world. So, where are you guys logging in from? UK, VA, DC, Northern Jersey. All right. Nobody representing the West Coast today. Oh, awesome. We got Colombia. See some repeats coming through. Awesome. So, as usual, again, people joining from all over, and that's one of the awesome things about doing these webinars online like this is that, we can get people together with a common interest from everywhere around the globe. Raised in Queens. um, so, like I said, I mean, it's really cool when we can all get together from different areas around the world and talk about the thing that we love, and that is trading. And while the focus of the webinar today, as Sammy said, is going to be on Forex, a lot of what I talk to you about, a lot of how I approach trading is objective in the sense that it can be applied to anything. So if you trade primarily equities, or futures, you can use the same concepts, the same principles that I'll be talking about today with those instruments as well. Now, of course, my focus is going to be on Forex. I'll talk to you about one of the services that we have here at T3, but just keep that in mind as we go through this, all right? So let's talk about Forex. I know you guys participated in that poll that we had at the beginning. If you didn't get a chance to vote in that, not to worry. Basically it was just asking whether or not you've actually traded Forex before, and there were a couple selections as far as what your experience level is, but not a big deal. We're going to get going here. First and foremost, our disclaimer. All this really says, guys, is that it's possible to lose money trading. And if you don't realize that, if there is anything I can guarantee when it comes to trading, it is that you will lose money. But there's got to be a but to that, right? That is going to happen with any business. There's going to be losses along the way. The idea, the concept here is that you want to keep your losses small. You don't want to create this hemorrhage to your account where you can't control it. So yes, losses will come along the way. That's part of trading. Not every trade is going to be a winner. But if you have a method that is proven, that is going to result in you being successful, not even necessarily more often than you're wrong, because you can be wrong more often than you're right and still make money depending on how you're managing things. So it's not even about being right more often than you're wrong. It's about having a plan, having an approach that you follow that is proven. Okay, that's the biggest and most important thing. And I'll tell you this from experience. If you try and bounce around from one place to another, it will likely lead to confusion. It will likely lead you down a path of, you know, a, a revolving door where you're constantly just running in circles, chasing your tail. You hear this from that person, then you hear something else from another person, blend all of these things together, and before you know it, you're just utterly confused. And that's one of the things that I look to eliminate, is the confusion when it comes to trading. And like I said, it doesn't matter what it is that you're trading. All right. So just understand, there is the potential for loss, and like I said, it is going to happen. So what I am going to ask you guys to do is clear your calendar for about the next hour. All right, if you can give me the next hour, I'm not going to waste any more of your time. I'm not going to hold you up. And if you want to stick around and ask questions after that hour, I'm happy to do that. So if you have questions, save it for the end. Happy to answer those. But for those of you who have dedicated an hour and only an hour, I want to respect that time as well. All right. So what we're going to talk about here today are the 5 major lies when it comes to Forex. Why you should trade Forex, and look, I'm not even going to say you need to trade it exclusively, but maybe even just to diversify what you do, right? Because that may be one of the biggest things that's holding you back, right? It is not being diversified enough, not looking into enough areas to where you can be making money, right? So let me ask you guys a question, and then of course I'll show you some trade examples as well. But I like when we can get interaction. So let me ask you guys something. What is most important to you about trading? Right? When you think of trading and why you're doing this, what is most important about trading to you? What are your real motives behind it? Right? And obviously the money is probably going to be top on the list, but besides that, we've got freedom, right? Income, naturally, like I said, that's one of the biggest drivers, right? So those are 2 of the biggest reasons. Time, more time to do what you want. Trading definitely gives you that luxury as well, right? You don't have to be tied down to the desk all the time. If the market's not acting the way you want to see it, you can go and do something else, right? Yeah, exactly. Money and more time to do the other things that you're passionate about, right? So those are probably the top 3 things: income, freedom, more time, right? Because with those things, you can really start to do anything else you want. Go on more vacations, spend more time with friends and family, do the things that you love to do outside of trading. Now, funny thing happens, right? We say that we do this to have more time to do other, but let's be honest, right? How much time do we really put into trading? Right? How much aren't we all a little addicted to it? Right? Be honest. You say it gives you more time, but it's just that adrenaline that you are always looking for more. So I think we can all relate to that, and it's just, to me, it's always a funny thing how that works out. So anyway, let's talk about these major lies that are out there. But before we do that, well, you know what, Christian? Let's see if we can't change that. Let's see if we can't get you beyond that point. So about me, and this is really just to help you kind of put a face to the voice and the name. But I've been trading for about 9 years now, graduated from Pace University, knew what the markets have to offer, and have since become a member of the research department here at T3, contributor to several different services that we offer, as well as teaching several different programs, including the Forex program. So that's a little bit about me, helps you kind of get to know who you're speaking with, right? Now, those major lies. The first one, a lot of people say Forex is a get-rich-quick market, right? And you know, where do you think that's come from, first of all? Where do you think that idea comes from? Some of you guys who said you trade from rich people. No, I mean, it comes from, of course, marketers in part. And, I'm not going to sit here and try and sell you the pipe dream. I'm gonna be completely realistic with you, because, you know, I don't like the lies. So, yeah, I mean, it comes from the fact that with Forex, you can get extreme amounts of volatility, or not volatility, I mean, you can get that, but you get extreme amounts of leverage, right? You can get a lot of leverage. So you can get started with a very small amount of capital, relatively speaking, and for that money, you can get tremendous leverage. And that's where this idea, this notion comes from, where you can get rich quick. But if you're looking to trade for that reason, then you're not in the right place, right? I'm not here to waste your time, right? But this isn't a get rich quick type of program. I mean, it's not. And really, there's no such thing as getting rich quick in trading and sustaining that. You may have beginner's luck where you have a couple winning trades, maybe more than a couple, but the bottom line is you have to have a plan, because what happens after that? What happens after you have that string of winning trades? Everything's great, you're riding this adrenaline high. Then what happens? What happens when a trade doesn't go your way, right? You average down, right? And you start to give it all back, right? And that's unfortunately something that happens to a lot of traders, a lot more than like to admit it. So you have to have a plan, right? The next thing is that Forex is just for short-term traders. And, I see a lot of things out there where it's scalping for really, really small amounts of profit. I mean, just a couple pips here and there, in and out, really active. And that may be where it comes from, but I'm going to tell you right now, Forex is not just for short-term traders. In fact, where I make most of my money, most of the gains that I am able to realize, come from the larger time frames, looking to capture the larger trends. Now, can you trade smaller time frames? Absolutely, and I'll show you that as well. But a lot of the examples and the service that I provide, the alert service that I provide, focuses on those larger time frames, because it'll give you more time to get into things, it'll give you more time to manage the trade, it'll give you more time in general, so that you don't have to be babysitting it. A lot of the trades that I place will last anywhere from 2 to 3 days or more at times, depending on how things are acting and how quickly the environment is moving. But I look to be in things for multiple days, trying to capture what I believe can be a multi-day move, but my entries come off of the hourly time frame, right? So I'm going to show you a couple alerts that have gone out recently and give you an idea of what that's all about. But again, this is a lie that a lot of people think is true when it comes to Forex, and it simply is not. So if you don't like trading the shorter time frames, then that's fine. Forex may still be for you, right? And if you do like trading the shorter time frames, then again, Forex is also for you, because it's just like anything else, and I'll show you what I mean in just a little bit. The next major lie is that the market is rigged. Have you guys heard that before? Have you heard that Forex is a rigged market? Yes or no? Or that there's manipulation, games getting played, etc.? You guys ever hear that? Yes, 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 no, no, yes. I mean, some of us have, some of us haven't. It is something that gets circulated around, and all I can say is, in a sense, what market isn't, quote unquote rigged? What does that even mean? I feel like rigged, using the word rigged is a cop out, to be honest. I mean, I feel like it's an excuse that people use for when they get stopped out. Oh, they were, hunting my stop. They saw where I put my stop, etc. Blah blah blah. It's like I said, to me, more of an excuse than it is something that you really have to worry about. Um, if you know where to look at for technical levels of support and resistance, and if you know how to read the trend, then all of the volatility, the whips, the wiggles that occur, right, that oftentimes will stop out many traders. If you know where to be looking, it's going to be very hard to get caught in some kind of false move or rigged move, whatever you want to call it. So again, that comes from knowing the key levels of supply and demand, knowing what levels traders, are going to be looking at, and knowing where the key support and resistance levels are for trend changes. Because when the trend begins to change, when those levels are taken out, that's happening for a reason. If you are not putting your stop, like, let's say you take a long position, right? And let me actually draw on this for a minute, because this is an important concept. Let's say that you've got this uptrend in place, higher highs, higher lows. You guys can see that, right? You guys can see that drawing I just put up there? Okay, excellent, perfect. So you have these higher highs and higher lows, right? Then let's just say price starts to pull back a little bit, chops around, and then you buy it here as it starts to break to the upside. If you put your stop under that area right there, that may be too tight, right? How many times have you seen price come back in like this, stop you out, and then move on up? Have you guys had that happen to you, yes or no? Whether it's with Forex or equities or futures, it really doesn't matter. It happens across the board. So how do we stop this from happening? Well, again, you got to know where to be looking. Where is the key support in this case? That's down here. So either you wait for a better pullback, a pullback deeper or closer to that support level, because you might be saying, well, you know what, if I enter here and I put my stop down here, where's my target going to be? Right? Most people will say the target's at this prior high. Personally, that's a bad idea. I mean, there might be a reaction at the prior high, but does anyone have a guess as to why I would say putting your target at the prior high is shortchanging yourself? And while you guys do that, I'm going to grab a quick drink of water here. Yeah, exactly, right? It's only the beginning of the move, right? And yeah, I mean, not just it might break the prior high, but it should break the prior high. Why should it break the prior high? Because the trend is up, right? The trend is up, and assuming the larger time frames are bullish as well, I have no reason to think that this series of higher highs and higher lows will not continue to happen. So if I only set a target up at this prior high, I might be missing out on a tremendous additional upside move. So not only do you have to know the key support and resistance areas, but you also have to know where to be looking to set targets as well. And a lot of this stuff, guys, I provide for you in the alert service. So and those examples that I'm going to show you, it gives you the entry, the stop, an initial target. And I say initial target because honestly, targets are, in my opinion, a starting point. I'm not going to sit here and tell you that when I set a target, I without a doubt know that it's going there. Quite frankly, I don't know whether it's going to get there or not. I know that it has a good shot at getting there, and to be honest, I will be more greedy in my target, because for me personally, it's easier to manage the position on the way up and adjust the stop or adjust the target down, right? I'd rather bring the target down based on new information rather than have to move my target up. Right? From a psychological point of view, I feel like it's a lot harder for traders to put your target at a higher level than it was if you're long. Because what happens if it moves up a little bit and then starts to pull back in, and then you get out at a lower level? What are you going to be saying to yourself? Right? What are you guys going to say to yourself? If you have, let's say you have a target at the prior high, right? Or beyond there. Let's say it's, it's up here. And then you move your target to up here, and then it begins to pull back and you get out at a lower level. What are you going to start to say? I should have just taken it where I had originally put my target, right? That's what you're going to say. I should have just taken it where I had originally put the target. So what if you set your target way up here to begin with? Expect more and react to less. That's what I like to do. Right? Because if I get this big target, who's better than you? But if it doesn't get there, well, hey, I still managed it to a profit, and I did a good job. Right? So I'm going to get rid of this here. Kind of went off on a little tangent there, but I think it's important to understand that. Right? So anyway, getting back to these major lies here. Next one. Whoops, skipped one there. The more complex the strategy, the better. To me, this is backwards. The simpler the strategy, the better it is. And you'll see that through how I analyze the charts. The simpler the strategy, the better. And finally, success in other markets does not equal success in Forex. That's not true. Right? If you've had success in other markets, there's no reason that you should not be successful in Forex. Furthermore, if you've struggled in other markets, whether it be equities or futures, ETFs, whatever, if you've struggled in those areas, Forex may be the answer you've been looking for. Forex may provide you with the solution, with the environment that you need to succeed. And I'll explain why I say that as we get into this next section, which discusses why you should trade Forex. And guys, again, remember, I'm not necessarily pitching you or saying to you that you need to trade Forex exclusively. In fact, I think that it might make a lot of sense for many of you guys, maybe even to just diversify. I mean, the market recently has been pretty volatile. I mean, it's been pretty quiet. The trading's been, in tight ranges. It hasn't been easy, right? If you're trading US equities, hasn't necessarily been easy. Would you guys agree with that? For those of you who are more focused on equities, would you guys agree? Yeah. Well, I'm not saying you need to stop doing that, but what I am saying is that you can stop doing that if you want, or just diversify into Forex as well, because it gives you another source or stream of income. So when things aren't moving in equities, instead of trying to force a trade, why not look and see what's going on in Forex? Maybe there's better movement there. You know, we had the comments earlier from Draghi, we had the oil numbers come out, and all of that played a role in what happened today with Forex. And it had a role in equities as well, but you know, it may not have been the same. You may not have been able to catch it. You may not have been able to take advantage of it. So, you know, again, being diversified and looking at other things is always a good idea. So why trade Forex? Well, it is the most liquid market in the world. Right? And here is a graph to put that into perspective for you. The US stock market does $191 billion in daily transactions. The futures market does $437 billion. Right? Forex does $5 trillion in daily transactions. So again, this speaks to how liquid it is. And for those of you who may have other jobs, who may not be able to trade during U.S. market hours, or at least not the entire U.S. market session, this may be the answer you've been looking for. Why? Because Forex is a 24-hour market. So it accommodates all trading styles. It accommodates all time zones. No matter where you live, there's opportunity. So here's the breakdown of the different sessions when each of the exchanges or sessions are going. You got London, the European session trading here from picking up around 3 going till about noon. You got New York picking up at 8 a.m. going till 4 Eastern, right? This is all Eastern time. Then you have the Sydney and Tokyo sessions picking up later in the day. You know, now things are starting to pick up there. So again, there's always opportunity with Forex. And when I say opportunity, I don't necessarily just mean that to be trades that are happening right now, right? It might mean opportunity is setting up. So in other words, you might be seeing things developing. You might not be able to place the trade right now, but you see the trade developing, so you can set your order in. You know, if it triggers overnight, then you get triggered into it. You have your stop in place, you have your target or target set, and you just let the trade go to work for you. Don't worry about it. You know, an all or nothing approach will beat 80+% of other management styles. So when I say all or nothing, what I mean is you take the trade, you put your target in the system, you put your stop in the system, you set it, and forget it. It's either going to hit your target or stop you out. One of those two things is going to happen. You will not interfere. Does that make sense? I mean, think about it from your own trading, guys. How many times do you take a trade that you get out of too soon? And when I say too soon, what I mean is you get out before it hits the target that you had originally expected. Does that happen to you guys before? Does it happen frequently? And if so, what are you doing to change it? Right? What steps are you doing or taking to stop that from happening over and over? Because if you're not doing anything about it, then it's not going to change. So definitely consider taking at least that step to an all or nothing approach until you can start to get more confidence and until you can beat at least that. But again, getting back to this here, it's a 24-hour market, so you always are able to check on what's happening, whether you have an open position that you just want to check on, or you want to see what's going on. Maybe something new is setting up that you want to place a trade on. You can do that, right? There's opportunity when it comes to Forex, and that is extremely attractive to those who have other jobs that, as I said, don't allow them to be in front of the screen all the time. It accommodates people who are maybe more actively trading equities that just want to focus on longer term Forex plays. Maybe somebody that's on the East Coast, or I'm sorry, the West Coast. They want to wake up early, trade the London session, and then be done for the day and go off and do something else. Maybe they have another job they got to get to, whatever. So it's extremely accommodating in that sense. And furthermore, because it's a 24-hour market, there's something you don't have to worry about with Forex. I mean, can it happen from time to time? Sure. But it's not really something you need to worry about. What am I getting at here? What am I hinting at? What is it that you don't have to worry about with Forex that on a daily basis you need to be aware of when trading equities? Exactly, gaps, right? Exactly. You don't have to worry about gaps when it comes to Forex because the data and the emotions of traders is constantly streaming. It's constantly flowing. So from one day to the next, you're constantly getting that information rolling through from one session to the next. So you don't have to worry about those gaps. If you're in a position, right, and let's say you took a position early this morning, right? You go to bed, you wake up in the middle of the night, you had a nightmare. The trade was failing, right? You wake up, you got a cold sweat, you're nervous about this trade. So unlike equities, right, you can go and check to see what's going on. Right? What was this, just really a bad nightmare, or is this reality? You can go and check and see what's happening. And look, I mean, worst case scenario, it hits your stop and you're out of it. You always got to have a stop in place. But so again, it offers that peace of mind as well. And yeah, it can gap over the weekend. It's not 24/7, so that is true. If there's some kind of, world economic event that takes place, there can be a gap that happens from 1 week to the next, absolutely. But from day to day, Monday through Friday, it's not necessarily something, even Sunday, when things start trading, Sunday through Friday, it's not something you really have to worry about. Now, that being said, you do want to know when certain major events are taking place, like an FOMC announcement or Draghi, for example, today. Things like that can cause additional amounts of volatility. So you got to be aware of that stuff. All right. And then finally, there's also a lower cost to getting involved with Forex. I'm going to kind of speed through this because, again, I want to show you the actual trades, the meat and potatoes of what we're doing here. So there's lower costs when it comes to Forex, which is another added advantage, where you have no platform fees, no data fees, no exchange fees. Right? So these are some additional incentives that as a Forex trader you have that you don't necessarily have with equities or futures for that matter. Okay, so with that said, let me show you some trade examples. And what I'm going to do here is I'm going to take down the slides here. So can you guys can see the charts? Can you guys see those charts? All right, awesome. So this is how I look at things. Right? It's not crazy. You know, we don't have a bunch of indicators on here. These are moving averages. This white dashed line that you see, this just shows me the daily open. This just shows me where the day opened. Right? And I use that as a support and resistance level. Right? That's really it. Right? It doesn't have to be more convoluted, more advanced, so to speak, you know, quote unquote advanced or confusing than that. Right? Because ultimately, price is what drives any indicator. Fear and greed, human emotion in reality, if we really boil this down, if we try and boil down what moves price, would you guys agree that it's fear and greed, human emotion? Right, would you guys agree with that? Yeah, in fact, yes, you can see on this that I've actually got a couple live trades open right now. Well, you probably can't see that US dollar yen one, but yeah, I'm going to show you a couple trades here. So one trade that I have on right now, and let me just expand this, is the pound US dollar. Right, so you can see this here. Right. You guys should be able to see this. You can see here the entry was taken right here on this breakdown. Let me see if I can draw on this. I'll make it more clear. Right, so here was the entry on that breakdown. Right, so that's where I entered. You know, it rallied up. You can see this down here, this line down here. This is my take profit. So that's where I'm looking for this to go to. Right now, you see this resistance, or rather support to the left. That's what it's been consolidating at today. But the trend is down. Here's my target. And so this is something that I'm just sitting in managing. I took this yesterday, sat through the little grind higher, and I'm still in it. And this is where, like I said, you have to know where the key levels are. A lot of people might have been shaken out of this move up. But now look at it, right? It moves back up a little bit, shakes people out, and then boom, down it goes. How frustrating would that have been? It doesn't have to be that way. We got a question here. Is it better to sit in something like that or to play both sides of the trade and swings? Honestly, for me, it's better to sit in it because I'm not one to trade against the trend. So this is in a downtrend. I'm not going to look to try and see this move down and then see that green candle and be like, oh, let me play it long here. Right? Because it could have just moved up here and then failed right here and started to move down. Right? It didn't happen that way, but it could have. So I'm just looking to capture the move in the direction of the trend. Right? That to me is much easier to do. Right? And I want to make this easy. And so that's one trade that I took and am still in. Okay, let's see if I gotta take this pen tool down. All right, so that's one trade. Another trade, I gotta clear that. Hold on one second. Erase those. All right, another trade here is in the US dollar yen, and this one, let me actually just show you something here real quick. This one, we sent the alert out. So here, this is just a screenshot of the alert. that went out. So this, if you subscribe to the alert service, you get, you get trade ideas like you see here. You also get other things, just general ideas, morning opener, general ideas about what's happening, what took place overnight, what we can look forward to in the session ahead, along with some other thoughts, general thoughts, things that I might be looking at. So it's not necessarily always going to be just trades. It will be things that I'm looking at, things to keep an eye on as it's developing. So here was the alert that went out. You can see just the other day, Tuesday, September 6th, timestamp 9:44. We sent this alert out. Entry on the US dollar yen 103.16, gave the stop, gave the target, and even had a chart to go along with it. Right. So basically, I was looking to short it under this support with a stop over the highs here and a target down into this area. Right. That was the initial target. Right. Everybody can see that, right? All right. So this would be delivered to your email once it gets sent. All right. So there was the alert. Right? And here's how it played out. Let me squeeze this a little bit. So here's the hourly chart. This, and I'll get my drawing tool out again. Right, so here's that same area, right? The stop was up there. There's the entry on that breakdown. And as you can see, I mean, it quickly shot lower into the target. So, I mean, this is not necessarily the norm, but I mean, hey, if it's going to just give me that easy money, I'm going to take it, right? So got in, played that move down, took some profit into that initial target. And as you can see, I'm still in some of this. I still have a position in this as well. And what I'm looking for is a much bigger move down. And why, hold on one second. What I'm looking for, and I'm going to have to go to the daily chart to show you this, but what I'm looking for is basically this to continue following through back down to this prior low around 100. So in the short term, we got a nice move off that hourly, but I am holding a little bit of this for a bigger move. I mean, if we look at this here, we can see that there's this big kind of downtrend line that we ran into. If I change this to a weekly chart, you can see the weekly trend's been down. It's staying weak. So I'm looking for this to come back and revisit these lows. And then I believe we'll be breaking even lower. So I'm thinking, my thought here is that the US dollar will be breaking the 100 level on the US dollar yen pair. Right? That's what I'm thinking. Now, will I hold this position until that happens? I mean, depending on the action, maybe, but probably not. Right? Probably not. But I am looking for this to continue back down to these lows. So already taken a nice chunk of this, made some nice money on that move down. Let me get rid of that. Right, made some nice money on that move down. It happened real quick, and as you can see, that was just easy, no pain trade. That's how we like them. That's how we draw them up. All right. Another one here, another alert that went out was on the New Zealand dollar, US dollar. And this one was on September 1st. So last week, a week ago today, went out New Zealand dollar, US dollar long, right? So looking to enter long, gave you the stop, gave you the target. We'll go to the chart and let me blow it up. I'm not in this anymore. It hit target, but we'll go back and show you here. So the entry, was here on that breakout. Got that quick move up, had to sit through this pullback. And again, this happened overnight, so didn't necessarily see it, and it was probably for the best, but this is where, like I said, you don't want to get caught in these whipsaws, especially if you're looking to capture a move based on the larger time frame. And let me show you that larger time frame. So where we got in, right, this is the daily chart, right? The daily chart, as you can see, trending up. Right? We got in as it broke out over these highs. Everybody see that? Right, we got in as it started to break out. Okay, so that was the entry there. Here, right, I'll have to get rid of these extra lines I just drew. So that was the entry, right? Sat through this pullback and just gave it the time and room to move up into target, which again was 73.70. So it did go past the target, but this 73.70 is just a little below where we are now. So I mean, we more or less took it as this wide range bar accelerated up. Now, I don't necessarily look to get out at the top of the move. If I can get the meat of the move, that's what I'm happy with. And to have gotten in on this breakout here and captured this move up, which was just over 70 pips, okay, that was the meat of that move. And as you can see, it has since pulled back in. Now, as I mentioned, if you want to be more active with Forex and not necessarily just trade the hourly setups, you can do that too. Take a look at the 15-minute chart from today. Right? Once it broke down, you had a beautiful little sell setup right in here and another one right in here that could have resulted in some really nice follow through to the downside. Okay, so you could have got some really nice follow through to the downside just based on what happened here today. In fact, it may look like if it breaks down here, it may want to go even lower. So that's something that we could keep an eye on for maybe a potential opportunity this evening or into tomorrow morning. Right? So with that, right, with that trade, again, pretty easy to do. Does anybody have any questions as far as those trades are concerned? All right, so let me just bring the PowerPoint back up here for a minute. And I'm going to actually introduce Amber. She's going to come on and talk to you about the newsletter service and a special deal that she's got for you guys here today. And then when I come back on, I'll get back to the charts, show you another trade that I took today, or actually the other day, and how that's going. And we'll talk about some other things going on, and also 4 things that you can do today, tonight, that are going to help you to become better tomorrow. All right, so I'm going to have her come on, and then I'll be back on with you guys, and we'll continue this discussion.
Thanks, Kurt. Everybody hear me? Quick sound check. Make sure I'm coming through clear for you. All right, thanks, Christian. All right, so you see here, we do have a special offer for Kurt's Lab, which is coming up on September 19th through the 23rd. It's from 9 a.m. to 12 p.m., so it's 3 hours a day over 5 days. It will be recorded. If you cannot attend live, I've had quite a few traders coming, international traders, where time can sometimes be a hindrance. We will have it recorded, or you can attend live, or you get both. So every attendee will get a course manual with all the strategies, all the details, everything that Kurt goes over, all his slides, everything that he goes over in those 5 days will be given to you at the time of enrollment. So if you sign up today, you can have that manual and go over it on your own to prepare for the course on the 19th. And also another special benefit is the year subscription of the Forex newsletter. So as you've been seeing, he gives these alerts. You're able to get in beforehand. They've been working out really well for him, especially the last few days. But yeah, with a year subscription at $7.95, he'll give you the lab for free. It's really good timing for this as well, because you can get in, understand what he's doing, what he's looking at, and it makes those alerts even more special for you. So again, the price is $7.95. This is good tonight. You can call us at 888-998-3548 or email info@t3live.com. Sammy and I are both here all night. So if you would like to reserve this pricing, if you're interested but want to pay tomorrow, you need to get some money in next week, just email us tonight or give us a call. We'll hold that spot and hold the pricing for you. Again, a year of the newsletter is normally $7.95. The lab itself is normally $9.95. We're giving you the lab for free if you subscribe for a year tonight. So again, give us a call, 888-998-3548, or email info@t3live.com. Hi, David. Please let me know how to pay and open. Yes, David, give me a call. We've been talking. Give me a call. 800-340-6477 is my number, or you can call the 888 number or email me. You have my email. Let's get you going. But yeah, I know you've been thinking about that, so that's awesome. I will also put you in contact with our representative at T3. For those of you that don't know, T3 Trading Group now has the capability of opening Forex accounts. So it takes a very small amount of capital. You'll get a high amount of leverage, and we also have a relationship with Gain Capital that can give you an institutional retail account for tighter spreads. So if you're interested in getting into Forex, we have you covered on all angles, between T3 Trading Group opening the account, to the education, to the alerts, everything you need. So whether you're experienced, new, stock trader, just want to supplement on the side, if you work full-time and you can't dedicate yourself to trading, Forex is an excellent option for you. The trading costs are low and the potential is very high. So again, give us a call, write us an email. If you have questions, we'd be happy to answer them for you. I don't want to take up too much of your time because Kurt does have a few other things to finish up on, but we will be here if you want to write us questions in the question box or send us an email, give us a call. We'll get you taken care of. So thank you very much, David. I will talk to you very soon, and enjoy the rest of the presentation.
All right, guys, can you hear me? I'm back. All right, excellent. So, as Amber said, sign up for a year of the newsletter. You'll get the course thrown in there for free. I think it's an awesome deal. To me, it's going to pay for itself. In my opinion, it'll easily pay for itself. You got nothing to lose there. So, hope you guys take advantage of it. Otherwise, back to the regularly scheduled program. And as I said, I'd share with you 4 things you can do now to get better. Right? And these are my opinion. These are what really turned things around for me. Right? When I started to really commit myself to doing these things, I started to see changes for the better. And I believe that it will do the same for you. And those 4 things are, in no particular order: study the charts, and specifically what really kicks off the big moves. Right? So when you go and look at a chart, you're like, oh man, I missed that. I wish I would have gotten on board. Instead of just wishing you would have gotten on board, look and see what kicked off the move. And don't just say it was news or it was this or that. Right? There was a pattern there before it happened. If you can start to see those patterns and ingrain those patterns into your mind, right? it's going to start to become second nature after a while, and you're just going to start to see them in the heat of the moment, and your mind, your brain will automatically connect that picture to what you've studied, and it will automatically forecast, in a sense, a successful outcome. So you need to start doing this because it's really going to help, in other words, with your confidence. And that is one of the things that traders struggle with the most, is not having enough confidence. And that comes from uncertainty. So what are you doing to improve that situation? What are you doing to eliminate that uncertainty? The next thing is that you need to realize that doing nothing is still doing something. A lot of people think if I'm doing nothing, then I'm not being productive. Well, maybe you're doing nothing because there's nothing to do. And instead of just doing something for the sake of doing it, in which case, a lot of times those trades don't work out, as we know, wait for your opportunity to come. It's not about the quantity of trades. It's about the quality of trades that you're taking. If you think about it another way, if you take a bunch of trades, right? Let's say you take a bunch of trades and your batting average is, I don't know, 50%. I mean, that's not necessarily where you want to be. So if you focus on the quality of the trades, right? If you focus on the quality of the trades, and as a result, your consistency increases, your batting average is going to get bumped to 65, 70% or whatever it may be. It's going to make you much more relaxed, much more confident. You're not going to have all these ups and downs. It's just a better situation. Right? And then you want to focus on adapting to and exploiting the current conditions. Don't get stuck in the past. What happened yesterday is yesterday's news. What's happening today? How have things changed? If things are still the same as they were yesterday, okay, fine. But the last thing you want is to be using a method that keeps you second guessing yourself, that keeps you in the past. A lot of traders, a lot of people, they'll be playing something long, and they'll keep playing it long even as it's pulling back. And it continues to pull back more, and they take it long again, and they get stopped out. And they're starting to wonder, well, why isn't this working anymore? Because the environment has changed. Why aren't you adapting? You have to adapt. And finally, join a community that's going to help you achieve your goals. Right? That is also another extremely important thing that you can do for yourself. Right? Join a community. As part of that newsletter that Amber mentioned, Amber talked about, we also get together once a month for basically, a coaching session in a sense. We all get together, we talk about trades that we've placed, trades that we may have considered and didn't place. We talk about things we can learn from and move forward with new knowledge. So it's not just an alert service where it's only email communication. We have these monthly sessions where we get together as a community and, again, help each other to achieve our goals of freedom, time, money, everything we talked about earlier. Right. So here's another trade that I had. This was also on pound US dollar. This one is from January, so it's a bit dated in a sense, but the reason that I wanted to show you this trade is because this is not something that I just started doing yesterday, right? In terms of using this approach or this method. This is something I've been doing for years. And, I could go back and pull up a trade from a year or two ago and show you the same thing, but, whatever. Here's a trade from earlier this year. Same easy, simple approach. You've got the daily open line, which is right here, a little tough to see, but it's right up here. You got the daily open line, you've got the entry, you've got the trail stop. At this point, when I captured the image, we were managing this, and it couldn't be a loser at this point. So it's not something that, you know, I just started doing yesterday. It's something that I've been doing that continues to work because it's an objective, simple approach that takes advantage of fear and greed. That's it. You know, if you can read human emotion and put that within the context of the trend, along with understanding key support and resistance levels, there's not much more that you need. Would you guys agree with that? Does that make sense? Can you see the benefit of looking at things in this way? I mean, honestly, I don't know how you can't. Now, I'm not necessarily saying every trade is going to be a winner. As I said at the very start of this presentation, not every trade is going to be a winner, but at least through an objective approach, right? If you do end up getting stopped out, you're going to know, okay, the trend is now changing. While I just got stopped out, maybe there's going to be a new opportunity coming. Or maybe my stop was too tight, right? And this clipped me, and I might need to look at re-entering, right? In other words, just because you got stopped out doesn't necessarily mean that you were wrong. You may have had the right direction selected just a little early, or maybe it was the wrong timing. But it doesn't mean you were wrong. You have to stay objective and on your toes and ready to read and react. You know, it's not necessarily about how you get knocked down when it happens. It's how you get back up, right? Are you going to stay down and cry about it that you got stopped out? No. Right? I mean, that's part of trading. You know, that's part of trading. But as long as you are trading in the direction of the trend with an objective approach, it can be much easier. It can be much more relaxed for you. You can be much more confident in what you're doing and not questioning every step of the way. Should I take the profit now? Should I kill the trade now because it's not working? What should I do? How should I react? This isn't doing what I expected it to do. You know, a lot of people think, oh, if I go short here, it just has to drop. Not necessarily. You know what? When I took this trade, I entered it right here on this breakdown, right here, where I just drew that line. This started to move lower first, then popped back up. And if I just saw this, right? If I just saw this, I might have said, if I was an uneducated or if I was a trader that didn't really have a plan or a set of rules, I would have seen this and probably gotten out. Right? It tried to move lower, failed, tried to move lower again, failed, pop back up. Nope, not doing it, I'm getting out. How bad would I feel on the very next candle? And then what's going to happen? I'm going to look to revenge trade, and it's just going to create a bad trader. You know, that's the bottom line. So that's what you want to avoid. You want to avoid trading in a way where you have no plan. Right? If you, I mean, it's kind of cliche to say, but it's really true. If you fail to plan, then you plan to fail. Right? I mean, it's cliche, but it's accurate. It's true. So it's definitely something you need to consider. And just to change this back, just to show you how the trade continued, right? It continued to fall after this initial consolidation here. It continued to drop, and you know, went on to be a nice winning trade. So with that, you know, we've gone about an hour. Like I said, I didn't want to hold you guys more than an hour for those of you that gave me that hour of time. For anyone that has additional questions, I'm happy to stick around and answer those for you. But otherwise, I want to thank you guys for being here. Again, if you have any questions, if you want to take advantage of that special that Amber offered, you can email in info@T3Live or give them a call. Either way, they are here and ready to help. But again, thank you guys for being here. I'll stick around for a couple more minutes if you guys have any questions. Otherwise, I look forward to having you as part of this community here, this Forex community that we're creating, and also in the upcoming course as well that I'll be teaching. All right, so thanks again, guys, and have a excellent rest of your day. Is it better to trade via a Forex account or trade currency futures, and why? Honestly, for me, I prefer trading the Forex. That's what I do. You could trade the currency futures, although it's not necessarily the same thing. I mean, you'd be trading like the Euro futures or the Pound futures. So they will move similarly, but in my opinion, Forex is the way to go. The charting that you can get, all of the bells and whistles that I have is what makes it comfortable for me. But again, you can do whatever you're comfortable with ultimately. I'm using the MT4 platform. I use the MT4 platform, and the course hours are 9 a.m. to 12 p.m. But we do record each one of those days, so if you can't make it, or if you have to run out for one day, that's not a problem. We can still get you the recording so you don't miss anything. And then what? I make myself very accessible, so if you have any questions, if there was a day that you missed, or a section that you missed that you had a question on, you can always email me too. I'd be more than happy to get back to you that way as well. With Forex Trader Pro software to be able to place stop loss. You should be able. I don't know Forex Trader Pro, to be honest, but I would imagine that you should be able to set it up so that if you get triggered into a trade, it will automatically put your stop loss in place, and even your target as well. You should be able to do that. The alerts are sent. I mean, you definitely get the morning alert that gets sent, and then sporadically throughout the day, depending on what happens. I mean, I can't say exactly when they'll happen, because again, it's dictated by the charts, but they'll come out throughout the day, alerting you to either, again, a trade that I'm looking to place, maybe something that I'm watching. Like, for example, today I said that I was going to be watching the New Zealand dollar, US dollar for short opportunities. Now, while it didn't set up on the hourly chart, as I showed you earlier, the 15-minute did set up a couple nice what we call T3 sell setups, and that is a pattern that I teach in the course. So there was the opportunity off the 15-minute chart. So, even just knowing, hey, this is kind of where I'm looking for opportunity will help direct you into where you should be looking for movement as well. Minimum to start an account. Minimum is 2,500. I don't know if you guys, a lot of these questions, guys, Amber is answering, so I don't know if you can see them or not, but you are getting answers to those as well. What kind of spray? Yeah, we can get you in touch with somebody here with regard to the spreads. I mean, we should be able to get you some tighter spreads for sure. No, the trades will actually be posted. For example, again, one of the ones I showed was on the US dollar yen, right? So you should be able to see that in the screen sharing right now. And it gives you the entry, the stop, the target, so you'll have all of that. I mean, look, you could use Ninja if you want to stick with that. You could stick with that. I use again the MT4 platform, but at the end of the day, I mean, you can use whatever you want. Um, that's really up to you. You don't have to use the platform I'm using. Um, you use what you use and just take advantage of the trades and ideas as they're sent out. Yeah, MT4, I do believe that they have a plugin for MT4 through Mac. I'm not 100% sure. I believe they do though. But again, you can always, like I said, use whatever you want to use as far as charting goes. But I do use MT4. All right. Any other questions? Yeah, no, I mean, I don't have any problems with MT4. It doesn't have all the bells and whistles that some of the equity platforms have, but you don't really need that either. You don't need all the bells and whistles. I mean, for what I'm doing, it gets the job done, right? And I've got everything that I want. Okay, so if you have any other questions, I am happy to stick around. If you're trying to call in, Amber and Sammy are on the other line right now, so you may have to call in again, or just shoot them an email if you got to run, info@t3live.com. They'll get back to you, no worries. But hope you guys enjoyed the presentation, and like I said, look forward to seeing you in the class. Take care and have a great night.